Hey, good morning, everybody. This is Jeff Gibby over at Metastock. I hope you're doing well. It's a very kind of a bit of a snowy day here in Utah, but we've had some great spring weather, and I'm excited for spring. I want to thank you for coming into the session today. We have a very special speaker, and I'll tell you a little bit more about him in just a second. So, the first thing that I want to talk about, and probably also the last thing I'll talk about today, is um, Saturday's session. If with the way that our kind of database is structured, we actually need you to register for both sessions. So I'm glad you made it today. If you want to come on Saturday, I'm going to need you to go up here and register. I'm going to put this out in the chat box in just a second here. It'll take you to our website. Excuse me. And you can just register for the second session. So I hope you can join us for both sessions. Rahul does such a great job, and I'm really excited about today's session. So let's go ahead and let me talk to you a little bit about Rahul Mohindar, today's speaker. Most of you know who he is already, but Rahul is such a great guy. A few of the things I'd like to say about Rahul. Number one, he's actually been a partner in Metastock for longer than I've been an employee of Metastock. And where I'm going on about 21 years here in a few weeks, it's a pretty long time. Such a great partner of ours. Number two, the method he's actually going to talk to you about today is the very first method I started trading with, the Rahul Mohindar oscillator method, and I couldn't endorse it enough. It's definitely a method that we've had in the Metastock software as part of the Metastock software for a number of years, ever since Metastock 10. I don't even remember what year that came out, but it's something that is very, very popular with our user base. It's a method that's really stood this test of time, and one that I absolutely love. So the other things I'll tell you about Rahul does a lot of work on CNBC India, or CNN India. He does a lot of interviews with them, I should say. But his main business is what he does is he's got several offices in India that are dedicated towards teaching people in India how to trade. And we really appreciate the partnership and the friendship. And I think what you'll discover about Rahul is, as I finally get done talking about him and let him start talking, is he's a very down-to-earth guy that really understands how to teach, not only how to trade, but also how to teach methods very, very effectively. So let's go ahead and bring Rahul in here. And let me go ahead and unmute his microphone. Hey, Rahul, how are you doing tonight?
Excellent. Thank you, Jeff. Good to be here.
And we can see the screen and we can hear your voice. And I'm going to let you get going.
Excellent. Thank you, Jeff. Appreciate that. That was a kind introduction, but folks, welcome to today's session. This is always very special for me because Metastock is a product that I've been using for, I'm trying to guess how many years, but to make it simple, version 4 is when I started using Metastock. So a little bit more than about 15 years on Metastock exclusively. And of course, my relationship with technical analysis dates back over 2 decades. So both technical analysis and Metastock go hand in hand because this program has evolved so dramatically with every single version that actually one is spoiled for choice in terms of features, indicators, scanners. There's so much that technology brings to us on the table. But practically speaking to you as a trader to a trader, and that's what I do for a living for a good 15 plus years, I believe that often when you have too much of information, it just lands up sometimes becoming confusion rather than confirmation. And to put that into perspective, when you look at 20 different indicators, it becomes hard for you to pick and choose which indicator you want to use, which time frame you want to use, which stock you want to select. I think it's becoming more of a selection process. It's more about selecting the right stocks, the right indicators, the right time frame. And all of this is very, very essential for our trading success. And one of the things that I've always believed in is the fact that one needs to get very focused in terms of what each one of us wants to do as a trader. Do we want to trade this market short term, long term, medium term, or however you want to define it? Do you want to trade stocks? Do you want to trade options, futures? There's an opportunity everywhere, but I think somewhere each one of us understands one's personality and one's comfort zone with timeframes, and one should focus on that. I am a firm believer that one needs to really focus down on one time frame. I get a lot of questions as to, look, when I use the RMO, when I use the systems that I'm trading, do I need to look at beyond one time frame? For example, many people say, hey, I'm looking at a daily. Do I need to look at the weekly as well to reconfirm? I do not necessarily think that you must do that, because often what would happen is that the daily is a buy and the weekly is not a buy. And the only reason why a lot of us often change time frames, in all honesty, is when we start losing money on a trade. When you start losing money on a daily chart, we're very quick to look at the weekly and get some consolation. So let's be honest here, that if we can focus on one time frame with some core rules when we look at trading. And why do we need these rules? Because we need to take out the emotion. We need to bring in the discipline. If we can have a rule-based approach to trading where we focus on one time frame and we focus on a strategy that looks at short-term, medium-term, and long-term profiles and then sets you up on a trade, that's what we need. And I think when we brought in the RMO, that was really the focus. The RMO was something I always traded off and still trade off. So this is something I use every single day. And the RMO is built with that whole mindset that I need to focus on the short term, medium term, and long term, and look at where these trends agree in terms of direction and momentum, and then we trade in that direction. So it's all about getting you a bit more focused, getting you into the fact that, look, hey, don't jump between so many different time frames. Why not have an indicator set or a template which is giving me signals of a short term, medium term, and long term, and then trade forward? So without further ado, let's get into, well, that's the bit of the disclaimer that Jeff read out. So let's move straight to the presentation. Let's get into the RMO and how we handle it with our market trends. Now, typically when you see a trend in a market or an uptrend or a downtrend, you see that trends are a little more complicated than what they used to be or what you'd like them to be. You often think of it as a straight line up move, but what tends to happen is you get a movement where you can see in the rectangle, you often have a phase that's very, very sideways on the market. You get a phase that's got a deep correction. You often have a phase that's just a small 2-day or a 3-day kind of correction. So within the uptrend, there are several peaks and troughs. Some corrections are simple, whereas some corrections are more complex in nature. So what we need to do is we need a method where we can wade through the entire trend by understanding that this is a correction here and this is a sideways market here, but essentially the longer term trend is up, and what we need to do is focus on the buy side. So yes, the RMO is built around the module that the primary trend is what we want to trade for. If the market's looking long-term bullish or primarily bullish, we want to be trading on the buy side. Likewise, if the long-term trend on a security or a symbol is looking negative, we would like to trade on the sell side. And to simplify a lot of that, what we did was to give you a simple oscillator where you look at it being above zero or below zero. So if the RMO is above zero, we are bullish long haul. If the RMO is below zero, we're bearish. Now, I often get the question that, hey, what is long term? I always get this question because for each one of us in this room, we could have a different definition to long term. There could be folks who think that 1 year is long term. Someone could think 3 years is long term. Someone could even think that 3 months is long term. Well, there are day traders who believe that today is long term because the maximum I want to hold is today. So for someone using a 2-minute chart or a 5-minute chart, he may say, hey, 50 or 60 bars for me is really long term. So let's define this as number of bars. So when I use the word primary trend, I mean 60 bars or more, 60 bars or more. So essentially on a daily chart, that typically translates to 3 months of price action, assuming you have 20 trading days per month typically in most markets. So about 3 months on a daily chart. If you're using 5-minute bars and you're looking at maybe a 6-hour, 7-hour market, you are looking at probably 1 day. So if you're looking at the primary trend, I'm trying to look back about 60 plus bars. So when I'm trading the RMO, my vision is not to trade for the next 4 or 5 bars. My vision is not to trade for the next 1 bar or 2 bars, but to try and grip the trend for a slightly longer patch. Now, there are a lot of ways that we can use the RMO, but I think I want to use this webinar to explain to you how I'd use it, some core rule sets that we got to keep in mind, and at the same time, how you can do some refinement. So in this very little time, I'm going to try and pack in and punch in some of the core points that can help you go away from this webinar as better users of the RMO system. The RMO is a very visual process, and the reason I wanted it to be visual is often when you load up indicators on a chart, I would typically load up so many different indicators, and often when you have 10 different indicators on the chart, you get a bit confused, and you start trying to think, hey, what's this saying and what's that saying, and you get a lot of conflict, and then you follow the one that your heart really wants to follow. So the RMO makes it very simple. It's just one simple oscillator. So as soon as you plot the RMO, you're going to have an oscillator that's either above 0 or below 0. So straight out, when you look at that, you're looking at a setup where the green histogram is either above 0, which means bullish, or below 0. So here I've got probably a chart of the SPY, and you can see that if the SPY was going up all this time, the RMO was bullish. And when it had the big crack down, when we dropped, we were in a RMO bearish phase. And then we again pulled back up on the buy side. So we're really looking at this as above 0 and below 0. We're not to confuse this with how much above 0 or how little above 0. We need to just answer the question as simply as, am I above 0 or am I below 0? We're not looking at the size, the length, the shape, the curvature, the slope. Is it ticking up or ticking down? The divergence. We're not supposed to be looking at any of all those factors. And to make things easier, when you load the RMO template, which is pre-built inside of Metastock, you would be able to get a ribbon at the bottom which tells you if the RMO is bullish or bearish. So there'd be a little strip down that x-axis, which helps us understand if the RMO is bullish or bearish. So don't worry about the shape. Don't worry about divergence. Don't worry about how it's ticking, how much it's higher, how much it's lower, because it can always come pretty close to 0 and then turn back up, right? So let's bear in mind, all we're looking for at this point in time is, am I above 0? Am I below 0? And as you get more advanced into using this system, you would like to keep in mind that I can probably just look at the strip at the x-axis and save some screen real estate as well. Now, when you look at the advantages of trading in the direction of the primary trend, it's really threefold here. First of all, if the market's going up and we're trading in the buy side, it increases our odds of winning trades. Secondly, we're trading in the direction of that long-term trend. It's a little bit like if the river is flowing upstream and we're trying to go upstream, that's an easier job. It's going to happen quicker, and we're going in direction of the stream, so obviously that aids in the move. And more importantly, it helps us have a focus on the big picture. So if a stock's long-term bullish, and maybe you bought it off a shorter time frame, and you have a vision or a flexibility to move it into a slightly longer and bigger trade, that big picture advantage always comes handy. So really very simple. If we trade in the direction of the stronger force, the longer term trend, the primary trend, call it what you want, it is definitely going to aid us in the speed of us getting successful, and at the same time help us be more accurate and efficient in our trading direction. Let's dive straight into the rules. How do you enter a new trade with the RMO? So buying into the RMO would need three things: a buy arrow, and I'm going to try and get a little more granular now. Blue bars, that means the color on the bar should be blue. And finally, the RMO should be bullish. That means the green histogram should be above 0. So presently, I only showed you the green histogram, which was the RMO, or the Rahul Mohindar oscillator. That's what it stands for, in case you're wondering why RMO. And the RMO being above 0 tells me that I'm bullish. Likewise, if I wanted to short the market or sell, I want to make sure that the RMO is below 0 or negative. Now, what are the arrows and the bar colors signifying? So as I told you in the beginning, what we also want to understand here is the short-term and the medium-term trend of the market. The short-term move of the markets are depicted and stamped in the form of arrows. And the medium-term movement on the markets is depicted by painting the bar colors blue or red. Let's dive into a chart and try and understand this. So here, if you see right before March somewhere, you have a buy arrow that comes in. And notice this is on a red colored bar. The arrow is my first signal of trend change, which means that's my short-term signal. And obviously, and most probably, you will see the arrow coming in first. That is before the other two come in. Then after a couple of bars, you have a blue colored bar. When the bars start turning blue, it tells you that the medium-term trend has changed. So first it starts with a arrow up, which is the short-term change. Then it moves on to a blue colored bar, which indicates a medium-term trend change. And then finally, if you look down at the x-axis, where I've got a little ribbon there with RMO bullish stated up there, that's the bar where the RMO went into a clear positive zone. If I looked 1 or 2 bars behind that, the RMO was still negative. So it makes my job really easy. It's, the whole idea of making it easy is very important. It makes it neat, makes it very, very clear. And especially when you trade, when you're looking at too many indicators, sometimes, as I said, it becomes a more laborious task and it becomes a more confusing task. Now, when you look at the blue bar coming in, and that's the point. So where I've marked the vertical lines, you see 2 vertical lines at this point. Those are the 2 points where all 3 are in agreement. So why do I call it a 3-dimensional buy? Because right on this bar, I have a blue bar. I already got the buy arrow, which is definitely a few bars ago. And then I have a positive RMO. It's this day that the first time that the RMO turned positive. So this is really the first point where all 3 are in agreement. If I look at the previous bar, that wasn't true because the RMO was still negative. So I'm looking for the point where I have all the 3 positive, ideally for the very first time. Now, they are what we call add-on trades, like you see right on this second vertical line, more towards mid of April. You have a blue bar and an arrow again, and the RMO is obviously continuing to be bullish. You can use this as a re-entry opportunity, or what I like to call an add-on signal or a reconfirmation into that same upward trend. Similarly, if I wanted to go short this market, let's look at a bear trend now. You tend to get the arrows first because that's the short-term trend, followed up with a red bar, which is the medium term. And then when all 3 are in agreement, that means the RMO has slipped into a negative phase. And you can look down at the x-axis where it labels it as RMO bearish. So that way you figure out that I have gone into a point. This is the first point where red bar, red arrow, and RMO is negative. Therefore, I've got all three lined up, a confirmation of short term, medium term, and long term, and therefore I want to go short on the stock. Now I'll come to precise points in terms of an entry and a stop and give you some ideas on exit too. I'll try and give you the key pointers in this short period of time, but it's very easy to use. And in case you're wondering how do you apply this on a price chart, you simply need to right click and apply a template. So when you right click on any chart, let's say you open up a chart on Metastock, right click, apply template, and then select RMO trade model. That's what would automatically bring up the different indicators of the RMO. And right now on this, I've minimized a few indicators like the exit swing signal and the swing trade signals, because really the swing trade signals are factored into the bar colors and the arrows. So it's already using the internals of the system, which are based off multiple different criteria, and then pasting those arrows and bar colors. So the idea is to make it more efficient and easy for you to use. And I'm really delighted that so many users use this so profitably. And I believe it's one of those systems that helps you stay aligned with the trend very easily. And quite honestly, if you ask me if the trend's up or down, you should be able to gauge that with absolute ease, with just a visual hands-free experience. And the fact that it's right built into Metastock, we've got so many users using it and we get such great feedback. It's heartening to meet a lot of fellow traders when I go for the different seminars that we do. And I keep hearing back from them on how easy it is to decide in which direction I want to trade in, what the primary trend looks like. And they're working more on money management and refinement of trade rather than working themselves up about is it going up or is it going down. That becomes a really simple decision suddenly when you use the RMO. So the RMO is all about helping you and aiding you detect that direction on the primary trend and then align up into trading into it. Now look at the second vertical and the third vertical. Again, we've got red arrows, red bars, red arrows, red bars. And you also have the RMO, which is continuing in negative. This is more a continuation into the same existing downtrend. The RMO has been bearish for maybe a good number of bars, and this is probably a re-entry opportunity for you to get into the trade. Let's say you missed out on that first breakdown and you want to claw back into it. Those are opportunities. Well, I could mark even more. I could mark this bar where you have another arrow. Basically, I'm making sure at any point I've got all three lined up for a three-dimensional buy or sell setup. Now, the nice thing is there are explorers and scanners that help you find the point where you have the RMO negative or the red arrows, in fact, where all three are in synchronization. Because ideally, we want to trade at these points where we have the vertical lines where all three short-term, medium-term, and long-term trends are in sync. In other words, where you have the red arrow, red bar, and the RMO in a negative phase, right? So it's very easy, very visual, and definitely keeps you in line with the trend over 70% of the times. And most importantly, keeps you focused. You're focusing more on your trading, on your money management, and not racking your head off as to is the stock going up or down, right? There's a big advantage we have here, and I'm speaking to you with close to 20 years of trading experience, that a lot of us as traders, we make our analysis process so difficult that it becomes hard to trade. And the idea of having the RMO in front of me is to make that process very easy so that you focus on your trading and not so much on your analysis. Computing power has changed the equation today. There was a time I used to be looking at hand-drawn charts till Metastock came out. And believe me, it was a very laborious process to even plot a moving average. So it's definitely a big advantage to have this kind of proficient technical indicators coming straight on with one click. There's a very big edge we have as traders today. There's a very big aid we have as traders. And I think one has to realize that we can now focus a lot more on honing our trading skill set and not getting too worked up on which indicator to use, right? Because the nice thing about the RMO is you don't need to look at multiple time frames. It's already looking at short term, it's already looking at medium term, and already looking at the longer term. So one question is, okay, we've understood how to get the trend. We can see that the RMO is bullish, and I'm looking for blue bars with the buy arrow. I'm looking for all these three different things. So where do I buy? Do I just buy at the market? Do I buy at the low point, the high point? Let's be a little more specific. One should always be buying strength and selling weakness. So if you've read a bit more on the Dow theory, or you've read a little bit about trend confirmations, we always think that when you get a signal, we want to make sure we sell below the low. If you've got a sell setup, you want to sell below the low. So let's say that's the bar, you've got the signal, you want to mark that low point, let it go a few ticks below it. What do I mean by a few ticks? Well, maybe just 10% that bar size, okay? So maybe if that's $1, maybe 10 cents. So you want to make sure that you trade a few minutes below it, a few ticks below it, maybe 10 cents below it, and that's when you pull the trigger. That's when you go short, sell below the low of the bar. Because if you think something is bearish, the simplest test for weakness is we would break the low of that bar. Likewise, if you look at that second vertical line there, notice over here, it does not break the low of that bar. So even if you waited 10 bars, it does not break it. Again, look at that one. You got another red arrow there. Doesn't break the low of that bar. So the timing can be a lot better, but when it does break the low of the bar, it just falls through. So it helps you in your market timing. It helps you as a confirmation. So whenever you're selling, try and sell weakness. Correct? Likewise, when you buy, so if that's a buy point, buy strength, buy above the high of the bar. So it's very important when you get the arrow, you get the blue bar, and all three lined up, buy above the high. So you exactly know where you trigger your trade. And I'm one of those guys who likes to be very explicit and rule-based, and not twist my words up. The idea is to give you some clarity here, and hopefully you appreciate that. That's what we all need in today's markets. We can read a lot and confuse ourselves. We can look at many different indicators and confuse ourselves. But I'm trying to give you some clear thumb rules of entry and exit that can help you as a trader from today. So buy strength and sell weakness. Now let's take a more up-to-date example. I think this is an hourly chart or a 30-minute chart on the SPY. I probably made this slide maybe last week. You can take a look, or probably updated till yesterday, if I'm not mistaken. So you got a buy setup right there. Let's go with each of the verticals. I'm starting with vertical 1, blue bar, buy arrow, look down, RMO bullish. You're going to buy above that high, and you get that nice little rally up. Then you waited for the red bar. Notice the red bar is coming right there, but you're not shorting the market there. You have the red arrow coming in much before, the short term there, the medium term there, but you waited a little more. You waited for that RMO to turn negative, and that's when you're going to sell. Where am I going to sell? I'm going to sell below the low. And notice when you break the low, you get that nice deep momentum which pulls you down, right? So I'm just focusing on the entry point to start with, and then we'll discuss more on the exits. Okay, so if we get our entry right and we get that kind of nice momentum, that's what we're all looking for. Now let's look at here. We've got a red bar in this, and I'm looking at the area that's circled up. And the reason I've circled that up is we need to understand this a little more deeper. You got the red bar. You've got that as the first time when the RMO turned negative. And that's easier when you look down at the x-axis. Notice that's the first time the RMO slipped from bullish to bearish. You want to sell below the low. It does not confirm. It does not break the low of that bar. If it does not break the low, you have not gone short. You have not sold. So therefore, whilst you saw the signal, the trade's not triggered. So that sell weakness concept is so important because it just saves you from a lot of trades which could be a whipsaw. So it's important we factor this in. It's important we keep this in our head that when we are buying, we're going to be buying above the high because we're getting a blue bar, buy arrow, RMO bullish, we buy above the high. When we're looking at selling, we want to make sure we sell below the low. So, which is why I've marked these vertical lines. Those are the bars where you not only see the signal, but you also break through the high or the low of the bar. Now, I could have marked this one as well. Okay, I could have marked this one as well. I could have even marked this one as well. Correct? So I've marked a few there, but again, all of them are good. So if you're looking at it somewhere midday or 5th of March, that too is a buy because you got the buy arrow, the blue bar, and that coming in as a buy. And you kind of ride this whole trend through because the trend didn't get disturbed here because that didn't trigger you on the downside. So stay focused. Stay focused with the rules. I'm looking for the 3-dimensional angles. That means the red bar, the arrow, and the RMO oscillator. And once I have all 3 lined up, then I'm going to use the rule of sell weakness, which means sell below the low. Likewise, when I get a buy strength or buy above the high. So keep these rules in mind. They're very simple, very efficient, very easy way to confirm, and keeping the core principles of the Dow theory as well in mind. Now, how do you refine these trades even better? If we can understand that volume is a great confirmation. So often I get a lot of people who say, hey, can I just use this as a black box and just not apply my head to it and trade very mechanically? Unfortunately, there is a breed of pajama traders, as I would like to call them, who just think that we just need to switch the button on and that's all we need. But there's a lot that you can do. There's a lot that I can get if you apply yourself a little more to this system. There's a lot that you can magically expand upon if you apply yourself a little bit with the RMO system. For example, how about we focus on the first breakout? So the first breakout is when you get the first, so you had a few red bars, you had an RMO negative phase, and you get the first buy signal or the first sell signal. So instead of trying to buy on this add-on trade or this add-on trade right here, you only trade when it goes up for the very first time, okay? So you only look at trading when you have it for the very first time. Sorry about that. When we look at blue bar, RMO turning bullish, the very first time it pumps up, that's when you buy. You are not looking at the add-on signals. I personally don't trade the add-ons. I'm only interested in looking for the first signal. And that's such a huge refinement because, folks, look at what you're doing there. You are taking the best trades. You're taking the most meaty trades. You're taking the most potential trades because that's where the trend is really triggering off. These ones are more add-ons. These ones are more re-entry opportunities. I really don't like to use the re-entry opportunities. I want to focus on the first breakout, and if you as traders can focus on that first breakout, you would automatically take the strike rate of the RMO system a lot higher. And it's not just about improving hit rate. And hear me out here, because this is so important. Everyone's worried about, hey, is this 6 out of 10 correct, 7 out of 10 correct, 8 out of 10 correct? That's not what you should be worried about. What we should be worried about is, can we take better trades on the RMO? Can we get more potential trades on the RMO? Can we get the trades that give me a greater reward? And those trades are the trades that you get on the first breakout. So if we focus up here that we're going to trade the first breakout and not the add-on breakout so much, we would naturally be taking more potential and more successful trades. So keep this in mind. Another very good way to refine this. So for one refinement I just spoke to you about was refining by using the first breakout and not add-on signals. One other very good refinement we could do here as traders is to bring in the aspect of volume. So let's look at here where I've circled up blue bar, buy arrow, first breakout. You had an RMO bearish phase, which is breaking out on the very first time there. You want to make sure you buy above the high, and it does go above the high. And that's if you're super mechanical, you'll do that. But let's apply ourselves here. If you look down at the volume and notice the moving average of the volume is a 50-period average of the volume, which is automatically plotted when you apply the RMO template, and there's a reason for that. I always believe that volume is a great confirmation to any indicator. Why just the RMO? To any trend. If something's going to fire out into a long-term primary trend breakout like you're thinking over here, don't you think we'd have above average volume? Yes, we would. We need to see we have at least 20% greater than average volumes, or before we jump into a trade. And I don't mind if you look 2 bars prior to the signal bar, or even 2 bars into the future. Notice all these bars here, plus minus 2 bars of the signal, are below average volume. Volume is money. Volume is demand. If there's not enough demand, is there not enough money chasing the trend? How is the trend going to erupt? So don't get caught in the whipsaws. Don't get caught in the sideways price action. So one amazing refinement that you can do here is whenever you get a first breakout signal, you're taking the most juicy trades, the most potential trades. If you can couple that also with volume, look 2 bars behind, look 2 bars forward. If all of them are subdued volume or under average volume, don't take the trade. Okay? But look a little later, you get a blue bar, you have a buy arrow, and now when you look at that volume plus minus 2 bars, you can see 1 or 2 bars which have really good volume. In fact, that one has pretty high volume, and that confirms the whole signal. So volume is what drives the trend. It's the money and the demand which comes in, and obviously the volume is a great component of confirmation, right? So I like to figure out as to where I'm getting trades which are first breakouts, and I also want to make sure that when I get the signals, I'm going to look plus minus 2 bars around them, and if I have maybe 20% greater than average volume, or that's when I'm going to take it. And I'm also going to avoid the trades that have all bars that are under average volume, right? So keep that in mind. You're just going to take your trading success for the RMO to the next level. Another quick example here: red bar, arrow, RMO bearish. This is why I'd say don't get over mechanical. You may say, hey, I've got everything lined up here. And the idea of a session like today is to help you not just understand the system, but to help you understand how you can take the best out of this system. So right here, when you have the signal and you see 2 bars behind, 2 bars forward, all of them below average, you don't want to take a short trade. You don't want to sell the stock right there, simply because there's no money driving this downtrend. Okay, so keep that in mind. But when you get a buy setup, you got a blue bar and you see that volume kicking in above average, that's a big deal, because that's when you see RMO's bullish, and that's all confirmed. So keep this in mind. The volume is a great confirmation to that first breakout and could be a driving force and confirmation to the trend. So let's look at a little more up-to-date chart. That's Apple. A lot of us look at that stock, and this is a daily chart. Helps you understand and gauge how well the RMO is working or how well it's not. Now, this has got almost 15 months of daily data. 15 months of daily data is what I've packed into this one screen. And all of these different vertical lines are telling you the different trades that you could have taken. Just to make it simple for you, we've got 5 trades or 5 first breakout trades which you could potentially be taking. Well, I'll just explain that to you one by one. Well, it's 4 to be precise, but I'll tell you why I said 5. The first one right here in December 2016, you got the blue bar buy arrow. Very first time goes from bearish to bullish, breaks out up, and boom, we've got the start of the trend. That's why I say first breakout's always the juiciest and the best. Now, this one's kind of a second or an add-on breakout. Now you can get the second one here, the third one here, the fourth one here. So there's so many arrows. So you got a lot of different add-ons. But you know why is this a little bit of a better add-on? Because you got some red bars behind it. When you see a bunch of red bars and then an add-on, you probably realize there's been a little more price correction. So still worthy of considering if you want to use it. But quite honestly, once you get used to first breakout, you really enjoy that a lot more. You know, those who take the trade there, that's a great way to look at it. So these are all different signals. You can literally call all of them add-ons in a way, because once that 2016 buy came in, it went in all the way right up to 2018. right? So the 2016 buy of December just ran all the way. Now notice, why did I mark this as a dotted line? Again, red bar, red arrow, that's the first time the RMO went bearish. And if you look down at the x-axis, the low of that bar in September was never really broken. So we never really went short on the RMO system, which means it locked me in from December 2016 all the way right up to February into a buy trend. And all we did was focused on where we could buy, where we could use corrections to get in, where I can look at opportunities to buy because my longer term trend is up. That's a great explanation or understanding that you can gauge just by looking at this one top traded stock as to how well it can do. And remember, Apple's not necessarily the easiest stock to trade. It's had, don't forget, November, December, January on this stock has been really choppy. You've had very deep corrections back in September 2017, very deep corrections back in June and July, very choppy there, but it's helped you stay aligned that the long-term trend is up and stay positive. In fact, every single trade that came on here gave you an excess of a 6% return. And, even that sell trade, which didn't give you a really big downtrend, that still gave you more than 6% of a move right from the low. If you say you sold below that low is more than 6% lower. Now, I'll talk to you how you can exit it and how you can trail your stops. But even if you look at the overall performance, I'm not here to pitch you a holy grail. I'm not saying that it's going to be successful all the time, but you can see how it's kept you so beautifully in the trend and kept you aligned into thinking, hey, just bother about where you want to buy Apple and not where you want to sell it. Well, that's a daily chart. You could, of course, be looking at a smaller time frame and having a different opinion on that stock, but focus on one time frame that you want to trade on. For example, if I'm looking at a 60-minute, I'm not worked up what the weekly chart is saying or what something else is saying. I'm just focused on my 60 because the RMO is doing the job of looking through the short-term, medium-term, and long-term trend. Now, looking at the next slide, stop loss. Where do I keep my stops when I trade? Now, a lot of people want to keep a very tight stop loss, and typically that variety is looking at a 2-bar high or 2-bar low, which means if I'm buying, I'm just looking 2 bars back and placing a stop. That's a very tight stop. It may work, and it often does, in fact, work well. But the way I tested the system, the way I designed the system when we built it, was always keeping in mind a 5-bar high-low stop. So when I buy, I want to look back 5 bars and then place a stop. Ideally speaking, I even like to look at where the swing high or low point is. Okay, and I'll show this to you with an example. And of course, for those of you folks who use tools which help you with support resistance, you can marry that into, and that would further help you. But to make it simple, a 5-bar high-low stop is good to start with. And bear in mind, if you can spot a swing high or low close to it, that refinement always helps. So we tested it and built it around the 5-bar high-low, and that's how we could tell you that that is the best stop to be using. So just taking a quick example on the E-minis. So if we look at the E-mini charts here, and this is an hourly chart I have up here, probably last week when it broke out on the upside. Notice that's the first point. The RMO was bearish all the way, okay? That's the first point where you have a blue bar, a buy arrow, and the RMO turning positive. Now you can say, hey, you had the arrow there, the blue bar there, but I'm not going to be buying here. Why? Because I'm going to wait for the RMO to go from bearish to bullish. And when does that happen? It happens right there. So I'm going to buy above the high. Now, what's a 5-bar low? When you count back 1, 2, 3, 4, 5, that's the 5-bar phase that I'm looking at. What's the lowest point in 5 bars? That low. Now, that is the correct stop loss. Now, you could say, hey, can I tweak that to a 2-bar low? Well, if that works for you, you can. But again, we've tested with the 5-bar low. I recommend you use the 5-bar low or the swing low. This, incidentally, is also a swing low because there was a bit of a downswing and then an upswing. So I like to call this my little short-term swing low. So let's keep this in mind that a 5-bar low is my stop. Now, do I tighten a stop? Often I get this question is, okay, this is a first breakout, Rahul. I can see this looks great. Why does this look great? Because it's the first breakout. It's the first time the RMO has gone from negative to positive, and I can see that volume backing it. So I really want to take this trade, but what's stopping me? What's holding me back? I think my stop's big. Now, again, each one notice I use the word on top, what if the stop feels large? Someone may feel that this is not a wide stop. For someone else, it may feel like a wide stop. Because remember, in a first breakout, you're also looking for quite a juicy, profitable trade. So you might be starting out with a big stop. Now, I'm not trying to tell you to be going against your money management or your risk is to reward ratios, but keep in mind, if the stop's too big, I'm not going to tighten the stop. In my opinion, there's nothing like tightening a stop loss. That does not exist in my dictionary. You can tighten a screw, but you can't tighten a stop. Because the minute you tighten a stop, you're suffocating your trade. You're probably telling yourself that, hey, let me raise my stop loss just because I want to take this trade, but doesn't, that can affect your accuracy. So don't get into tightening your stop. What you can do is tighten your entry. You may like to buy a smaller quantity so that you're more aligned to your risk is to reward and your money management. So you may say, if I usually bought a 500 lot, I'd buy 250 shares. Or you might say, hey, I'm going to just buy 100 shares above the high, and I'm going to buy a little more if the thing drops. So let's say if it drops down maybe to 270 or 2700, that is, I'm going to be looking at buying in the next set or buying in majority. So in other words, I'm splitting up my entry into two halves. I'm probably buying a little bit above the high and a little bit if it pulls back. Now you may say, what's the logic of doing that? Well, the reason you're buying a little bit above the high is because you don't want to miss the trade. You like the trade, but maybe you don't like the stop. So you definitely want to take the trade, because what if it just fires through and gives you a big run up? You don't want to miss out on that big trend. But what if it doesn't really run up instantaneously and has a little pullback? You can use that pullback as an opportunity to average out and get in. So if your stop feels large for any reason, you can split up your entry. If it doesn't feel large to you, go ahead and take the whole trade there, okay? Because later on, you will be trailing your stop. With every add-on signal, you can potentially train your stop. With different indicators like the like the exit swing signal, and for those of you on the ATM who use the trend decider, there's some great methodologies to help you trail your stop. So that's going to happen down the line. So if you at an initial stage are dejected looking at the stop, but yet can see that this is a great first breakout, has the volume, etc., take the trade and split it up. So I'd like to look at it as, let's buy a little bit above the high, which is what happened, and let's buy if it drops somewhere to the midpoint. Now midpoint meaning that's the point of entry, that's your stop. I'm just kind of trying to take the middle point, which is somewhere here. And notice you did have a little gap down there, which allows you to buy into the market. So you still have an RMO which is bullish, and that's where you could buy into it and say, okay, now I've averaged out and now I've entered in and my stop still stays the same. So that's a great way to help you work on an entry plan. And if you look down the line, that was the bar that you got into, and then the whole thing rallied through it. Now, in case you're wondering, look, it went down. You had an RMO negative phase that came in. For me, that's a total ignore, because just look at the volume, totally under average. Doesn't really work out. Besides, it doesn't even break the low if you get very critical on that. Now, why is it important? Now, let's just zoom into that area. If you see red bar, RMO bearish, if you went very mechanically, you'd say sell below the low. If you looked at volume, you're not going to do this trade. You're not happy, right? Besides, if you can use a swing point, now what's a swing point? Where you can see, you've got a little intermediate low right behind it. You can always use this as your trigger, because remember, you're trading biggish trends. You're not trading a very small trend. You may say, instead of selling below this low, why not I sell below this low? It may mean selling a little lower, but it also means selling a lot more confirmed. So please keep that in mind. And the volume, these little refinements save you from really a lot of trades if you're getting overtly mechanical. So friends, my advice is don't get overtly mechanical. You can make this system do wonders for yourself if you can learn just 2 or 3 things from today's session. If we can learn, we want to trade the first breakouts like you can see on this chart here. Again, that's an E-mini chart on the hourly. So I'm going to take the buy trade right there. I'm going to take the sell trade right there. Notice if we can concentrate on the first breakout, and don't worry about the second and the third and the fourth and the fifth breakouts, okay? Try and focus on the first breakout. Try and focus from where we're breaking out for the very first time. From an RMO bearish zone, where am I becoming bullish for the first time? If we can concentrate on that, we would really get the best point to trade. Besides, confirm it with volume, right? For example, that little red area, notice how the volume confirmation saves you. Third, sell below a low, buy above a high. Keep that rule of trigger in mind. So once you have a red bar and a red arrow and you can see the RMO is negative, if it does not break the low, don't sell. Don't just randomly sell anywhere, because your timing, your market timing, your momentum timing can get a lot better. Notice when it does break the low through, you are going to sell. So in case you're wondering, what about that blue bar? You have a blue bar, a buy arrow, and an RMO bullish with the volume. If it doesn't take the high out, you're not going long. So just see how it saves you. So buy strength, buy above the high of the signal bar. That's a very important rule. So if today you can go back thinking that, hey, I'm going to focus on the first breakouts, as in the points where RMO bearish goes to bullish or bullish goes to bearish, I'm going to concentrate on first breakout trades. I'm going to reconfirm that setup with volume. And I'm also going to be looking at using the rule of trigger that I'm going to be buying and selling above a high or below a low respectively. You are going to create a magical difference in the way you'll accelerate your performance with the RMO system. So that's something which I strongly recommend you follow on. Now, just touching very quickly on the exit model, and I'll probably extrapolate a lot more in the forthcoming sessions. We're doing a 3-webinar series, which, of course, 48 hours from now, we have the next session, and then we're doing the ATM Pro class as well. So I'll be talking a lot more and extending my whole explanation on even the exits there. But very quickly, ideally use a trailing stop model or the exit swing signal. The exit swing signal is something which is pre-built into the RMO template, and that can definitely be used to help you trail your stop. And I'll try and give you one quick example on that. And for those of you on the ATM, one of the tools I love using is the trend decider level. So we'll talk about that in the ATM or the Pro class and talk to you. But talking to you quickly on the exit swing signal, which is available inside of Metastock. So here's a chart of Apple. This is a daily chart. That's the exit swing signal, comes up automatically when you load the RMO trade model template. If the exit swing signal rotates down below that red line, which is at a value of 75, you're going to be using that low as a trailing stop, okay? And don't just sell it 1 cent below the low. Give it a little filter. Give it a few ticks. So, people ask me how much is enough. Well, if that bar is $1, give it 10 cents, okay? Let it break. Let it stay 2 or 3 minutes below that low. Let it not just be an open tick. So don't suffocate your trade. Try and work to trading a few ticks below the low and triggering off right there. So you can keep lifting. So once you've bought in and you've seen 5 or 6 bars running up into the trend, you can use the exit swing signal to trail your stops or exit. That could be a great way. Well, there are a lot of different strategies to exiting. And again, I'll extrapolate further as we go into the next few sessions as well. Trade identification. If you're looking at how do I look for these trades, well, one great way to look for the trades inside of Metastock, you have the Explorer, which is a scanning utility. All of those scans over there, which you see the 6 of them, RMO bullish and bearish. Wherever you have a new swing trade, buy or sell arrow, or the RMOs turned into a first-time blue bar, first-time red bar, you can scan for them. Besides, I've also built for the ATM users, we have what we call the integrated buy and sell. So it finds out the point where all 3 are in line, the arrow, the bar color, and the RMO bullish. So where you have all 3 lined up for the very first time, that'll come up on the integrated buy and sell scan. So that's a great way to go if you have the ATM with you. If you don't, you still can look for stocks within RMO above 0 or bullish zone, and then look for stocks within that bullish zone for a buy arrow or a blue bar. And for those of you who have the ATM, we also have the Power Screener application, which is a live scanning mechanism, which automatically scans for you, whether it's end of day or real time, and tells you where you have a new setup, like an RMO 3D buy or sell. Okay, we'll touch more on the ATM as we move along. Now, if you look at the important pointers I want to leave you with today is focus on the fact that you are trading on the first breakout and not an add-on. Try and put more weight on that first breakout. Use filters, as I said, buy above the high end. Give it a few ticks. Don't be miserly on that filter. Don't just wait for 1 or 2 cents. Let it be 2 or 3 minutes above it. Let it, put in a price alert when it goes above that high that you want to buy. So focus on the first breakout. Use a filter to buy above a high. Do some common sense integration in terms of short term, medium term, and long term, which is automatically happening with the system. When you see the arrow, the bar color, and the RMO system, because don't get into excessive time frame integration, because I know most of the time a lot of us look at daily, weekly, and monthly. It's, as I said in the beginning, you're just consoling yourself. It's when you start losing money, you look at a higher time frame. And mirror, mirror on the wall, if you really ask yourself when was the last time you did that, you probably get the answer. So when you're doubtful of a trade, when you start losing money, quite often we start looking at higher time frames to get some consolation. Remember, the RMO is already integrated with short-term, medium-term, and long-term. Do I need to do a lot more indicator integration? No, because it's already doing so much. Fibonacci as a guide, I'm a great fan of using Fibonacci projections for price targets, so I would recommend you look at that, and there's some nice help as well inside of Metastock. So Fibonacci is a great way to confirm. I use those ratios quite actively, so for those of you familiar with that, that's a great way to confirm up and even assess targets. Volume, as I showed you today, plus minus 2 bars off the first breakout signals, is again a very relevant pointer in terms of increasing your success with the system. Now, the RMO system was released and available to all within Metastock 10 and higher, but a few years ago, as in 2016 or early 2016, I built the super filter, which is a further refinement of the RMO system. For those of you who have the ATM, I'm going to be discussing this in the next session, which is about probably 47 hours, if I'm not mistaken, from now. We will be discussing the super filter a bit, but just to leave you with a little thought, what do we do in the super filter? The ATM is very adaptive. It doesn't work off a fixed value. So you can see the bar colors are now painted into an orange and a red. So red is the strongest form of weakness, and orange is a milder form of weakness. So when you see that you get a signal on a red colored bar, that's even more confirmed. And the nice thing is it takes out a lot of chop as well. So when you see that you have the RMO turning from bearish to bullish here, and you can see that these bars are still orange, it saves you and refines the whole system a lot more, simply because the super filter is super filtered by its adaptiveness, because it adjusts to every chart that you are reading. It doesn't work off a static value. But again, we'll touch on the super filter, but broadly, that's how it looks, light blue and dark blue. Beautiful system, because it refines, these little ticks sometimes you get on the RMO. You don't have to manually refine and confirm all of that. So there's lovely refinement we've built into it. And it helps you sense that transition of the trend. So when the dark red starts moving into orange, it helps you even sense the transition. So we'll touch on that super filter bit, but I think I'd like to leave you with by saying thank you, and I'll probably turn it over to Jeff. You've been very patient listeners, and I'm going to leave a few minutes open for questions, and I'd like to answer as much as we can. So over to you, Jeff. And
hey, Rahul. Good job.
You.
Very enjoyable. I actually learned some new things today. I hope you guys did too. We do have a couple questions that have come in. And Peter asks, when you're looking at the trades, do you take the direction of the 3 indexes he asked for into account? And it might be a little bit different for you. I'm not sure how many indexes you have in India. But do you look at the broad market when you're taking RMO trades?
Great question, Jeff. And well, to answer you very clearly, I look at broad markets. So in other words, I'm not just trading one market segment. I'm looking at trading the futures segment, which could mean commodities at times. I look at the Australian market, the Indian markets. I also track the American market. So it's not like there are different rules for different exchanges or stocks. So I would say don't worry so much about an index, because you may say that the index, a broad market index, is going up, but maybe the stock that you're trading in is going down. So there's always going to be some kind of a post-mortem where you say, hey, this outperformed the index or this underperformed the index. I personally don't like to confirm my trades with a broad market index, but what I like to do is confirm my trades with a sectoral index. So the markets that I trade do offer me, let's say, an energy index, or for that matter, a retail index or a banking index. So I can always confirm up with a sectoral index, which is more relevant because stocks tend to move more in sectors than just a clear broad market. Because when you look at, say, the NASDAQ 100 or the S&P 500, it's such a broad index, it just gets hard.
All right. Let's see. Matthew said, thanks a lot for the great presentation. Looks like Lobster and Joseph have very, very similar questions. So I'm going to kind of rephrase both of them a little bit. But the question is, do these work on lower time frames, such as 5-minute, 30-minute, 10-minute bars?
Yes, absolutely. I mean, as I said, the rules don't change for the time frame that you use. The rules don't change for the symbols that you trade. I myself look at a lot of intraday intervals. I'm more someone who likes to look at the hourly kind of time frame, and not someone looking at very high time frames. And yes, when we designed it, we did test it with lower time frames. But one of the things I would tell you is try and look at a symbol that's very well traded. When I say very well traded, I don't want a symbol where you say there's no trade for 5 minutes and you're missing a bar, or you have an open and high, low, close bar that's just one little tick. So I need to look at a stock that has a decent amount of trading, particularly if you're looking at those very small intervals.
Okay, let's see. Good answer. Brian asked, do you have a training video on this system? This is a good presentation, but I want a deeper discussion of what you have gone over today. I'm going to answer that one. We've actually recorded quite a few videos on RMO. And if you want to email me, I can send you a link up to our YouTube channel that will have a great deal of coverage. Both it's been done by Rahul and by me. But I'd have you kind of look at the Rahul ones first. He developed the system. He designed the system. He does a great job with it. And I would also say that he's a better teacher than me. But he might argue that point.
You bet, Jeff.
Brian
You've presented it so many times, you know it so well.
Brian asked a question, if I book a percentage of my profit at a 2 or 3 day 3% ATR, will it reduce my percentage of profit?
Brian, I think what we've got to put into perspective here is not a percentage. What we need to do is, ideally speaking, the way I like to look at exiting my trades, and this is just something personal, and hopefully it gives you a little cue. I like to exit my trades in two pieces. I don't really just buy at one point and just sell everything at X%. So I may have a point where I see resistance or a Fibonacci projection level, and whether that's 1%, whether that's 4%, wherever it is, that's a point I take some profit. And then I like to use a trailing stop. So trailing stops are the way to go, because what if you're in a run which is going to take you up 20%, right? Then the trailing stop's what's probably going to help you take most of that trend. So try and work with a trailing stop. That would be my suggestion. And as I said, in the following sessions, in fact, one of the next sessions, I'm going to be discussing a little bit on that trailing stop with the ATM as well. So it'd be a great idea if you can join in there as well.
Let's see. We're going to take 2 more questions. I'm going to answer this one again. Sushant asks if it's the same thing as the MACD histogram. And I would say no. I've actually done a lot of trainings on MACD videos as well, and probably a couple hundred training sessions on RMO. I can tell you they're very, very different. So,
but Jeff, I'd like to kind of add a little more to that. Now, if you look at a MACD, let's say this very chart that I have open, I hopefully you can see a screen which shows the Dow Jones hourly chart on my screen. If you see this whole uptrend which you had all of January, and then this whole drop after that, you probably see a lot of MACD sells on this way up, probably 4 or 5 sell setups. But the good thing is with the RMO being bullish, you're not taking those MACD sells. I mean, all of January, I could be drawing an RSI divergence and saying the market's overbought or the MACD being a sell. So the whole idea is to give you something more refined and more up-to-date, more tech-proof, so that you get something better than the conventional. So in my opinion, there's a lot more that the RMO is factoring in. There's a lot more refinement in the RMO. And I have extensively worked with that MACD and RSI, and I believe that clearly there's a definite edge. Well, a difference is not even a word I'd use. It's, surprisingly and starkingly different.
To that, it actually leads perfectly into the next question. Ram wanted to know if you kind of had an idea of the general success rate of using the RMO.
So obviously what happens is when you use the RMO system on different stocks, you have different success rates. But when we developed it, we tested it off the NASDAQ 100. We looked at the Indian markets, and broadly different stocks obviously gave us different results. But anywhere between 6 to 7 out of 10, somewhere within that is where we found the mean. So that's the average hit rate, if that's your question. But again, I'd kind of into the point of concentrate on the more potential trades, the first breakout trades. Those trades give you a tremendous amount of reward. So don't worry so much about the system's success rate. Look at the amount of a run that you get on that first breakout. That kind of packs in the bigger answer.
And I would add a little bit to that if I can, Rahul. In my experience, generally, since it's a trend following stocks, if you match it with stocks that have a tendency to trend really well, like the Apples and the Googles and those type of things of the world, you're going to have better results. But it's just like anything else. If you're going to look to really seriously add this to your trading game, and I'd recommend it, I would recommend that you look at a lot of charts and kind of get a real feel for how it works and kind of even do a little bit of paper trading with it. The nice thing about the market is you don't have to go and risk it all on your first trade. You can kind of take trades that are very, very small while you kind of get really comfortable with it and kind of understand the ins and outs of the system. And if you do that, what you're going to find is your discipline is going to improve about it as well. Okay, so one last question. I think it's the last one we really have time for. We're kind of running over, and we do have another session on Saturday as well. But we did have a few questions about kind of the types of stops that you like to use, and specifically if you use a trailing stop, Rahul.
Yeah, personally, I do use a trailing stop all the way. In fact, I'm a great fan of the trailing stop because it's a more rule-based approach to trading. And more than just being rule-based, what's very important to me is if I can lock in a big trend. If I said, look, hey, I'm in this market or trade for 2 or 3%, one way to do it is I made 3% in 4 days, and, I just quickly start multiplying and say there's so many 100% in 1 year. That's not the way I'd like to look at it. I want to make sure that I'm using a trailing stop because if that stock is really rallying 10%, if I can even take 6 or 7% out of it, that really gives me the big kicker. So for me, it's all about trying to use a trailing stop and making the most of a trade because remember, if I'm focusing on first breakout, I need to have a trailing stop to make the most.
Awesome. Okay. If we have any questions that we didn't get to, and there are a few, so I'm sorry about that, but feel free to email me. I did type in my chat or my email in the chat. Here it is again, in case you missed it earlier. To the question that you're asking, Keith, about the recording of the webinar, what's your email tomorrow? Sorry that you missed the start, but it's okay. We recorded the whole thing. So watch your email tomorrow morning, and we'll be sending out the archive. And then let's go ahead and just kind of, I'm going to go ahead and change the presenter back. There's a few things that I wanted to talk about at the end of the session. So thanks for all the questions, guys. It's really, really good to have all of these questions and the attendance that we have today. So I do want to mention again for the Saturday class, I know this is a series of webinars that we're doing. We're doing 2 free classes that Rahul is going to be with us. The next class is on Saturday at the same time, noon Eastern, 10 Mountain. You can join that. What you're going to need to go ahead and go over to this link. You need to sign up for both classes if you want to attend them. The third class that we're going to be doing is specifically for users of the RMO ATM product. And as long as you're a user of the RMO ATM product, I will send you the instructions to join that bonus class. Okay. We will be talking in a lot more detail about the Rahul Mohindar oscillator system in the ATM 2.0 system in the class on Saturday. But I want to talk a little bit about it as well. What we talked about today is included for free for Metastock, and you can go ahead and start playing with it. On Saturday, we'll be covering all of the rest of Rahul's methods, like his breakout catcher, his counter trend indicator, his ATM2. And I want you to come and see kind of like what he has to say. If you liked what you had to hear today, I'd also encourage you to try out the ATM 2.0. It's a monthly subscription. I'll talk about that in just a second. But the thing about it is if it's helpful for you, then just keep the subscription. It's a reasonable price at $99 per month. If it's not, just cancel your subscription. The risk is not that high. The reward is very, very good. We will be doing on March 22nd, which is a week from today, a special class for the ATM 2.0 users. In that, Rahul is going to discuss using trailing stops, entry and re-entry models, time frame integration, option trading strategies, and really talk a lot about the power screener application. So again, we'll be going to go into the ATM 2.0 in a lot of detail on Saturday morning for me, Saturday at noon Eastern to be really specific. But you can normally, if you just signed up for this as a product on our website, it would cost you $129 a month. If you sign up for it as part of the webinar promotions that we're running around it, for the life of your subscription, you'll just pay $99 per month. And that's forever. So in order to do that, give us a call. The phone number is 800-882-3040. You can chat online with our sales guys. We have a great group of guys that are very knowledgeable. If you're kind of curious about if the exchanges you're actually trading are covered, or you have something that you're not quite sure about, but you want to ask, they're a great resource. So you can chat online with them at metastock.com/saleschat, or you can give them a call at 800-882-3040. There's one other thing I wanted to show. Somebody in the chat earlier actually asked a little bit about this, and I thought, well, that is such a good idea. He wanted to know if he could color the RMO models, green or red if they were above 0 or below 0. So I very quickly said, well, that's a really good idea. And I actually put together a little bit of a template that will actually make your RMO model look like this. So if you want to get a copy of that, just email me. I'm going to build a little bit of a setup file that will just install it into Metastock for you. And I'll just email it to you. I'll probably have the setup file after lunch today. So if you're a user of Metastock, you want to get a copy of the RMO that looks like this. The only difference is it's just green above the when it's bullish and red when it's bearish. Just drop me a message. I'll send you a little install file, and it'll put that template in there for you. So let me type in my address here again, just so you have it. Actually, I just typed it in, but you know, at metastock.com. Okay, and then again, I'd really encourage you to give the RMO ATM 2 a try. I think the advantage of actually getting it today is you can try it out for a couple of days. You'll have a little bit of a head start when Rahul comes in and does the class. Again, it's a really good lifetime discount, $129 a month normally, $99 for life. You can also, one of the things I wanted to mention is you can also pay for that by the year. So if you get a yearly price on it, you're going to get about a 20% discount. It's $1,000.69 for it, or $1,069 for the year. If you do that, basically, you'll have some one-on-one training directly from Rahul's support staff in India. So they'll get in touch with you and basically help you set up everything and kind of get some training on how everything puts together, which is a great value add. So give us a call, 800-882-3040. You can chat online at metastock.com/saleschat. Okay. Anit says, can you send me the setup? Just drop me a message. That way I won't forget. I try and have all my emails cleared out by the time I leave every day. Anyway, so just drop me an email and I'll make sure to send it over to you. That'll also help because I don't have your email address and I will very likely forget. The best way to get that template is know yourself, right? The best way to get the template is just drop me an email message and I'll send it over to you. Rahul, do you have any final thoughts?
Well, I'd just like to say a big thank you. You've been wonderful moderating this all, and I'd like to thank everyone for attending. And I really wish you a lot of success with the RMO. It's not very complicated. It's very simple. It's designed to be easy for you. And hopefully today's session has thrown some light as to how you can maximize performance with the RMO. So wish you guys a lot of good luck with the trading on the RMO, and hopefully we'll see you in the next one, which is on I keep forgetting, well, on Saturday. And follow up to that, of course, is we have an ATM Pro class, which is a users only exclusive class, as Jeff mentioned. So if you do sign up for the ATM and you have the ATM, you can also register for the Pro class, which will be a great session where I'll talk to you as how to use that ATM even more solidly. So thank you, folks. Appreciate the time you've given, and I wish you guys a lot of good luck, and a big thank you to you, Jeff.
Great job today, Rahul. Thank you for your time. We love having you in here. It's always so good to have you in here. I want to thank everybody for coming as well. We had some great attendance, some great questions. Thanks for your participation and your feedback. And so we're going to go ahead and let you go to lunch if you need to, and get on with your day. We hope to see you on Saturday.